Wednesday, November 16th, 2022. Maneco 64, home of alternative economics and contrarian views. So today we're going to look at the possibility of a new inflation target that's been put out there by probably policymakers, the mainstream media. We're going to look at how that could affect you and how it will affect different people differently, depending, of course, on your financial situation. And I think it's really important we look at it. Before I start, of course, I just got back from Zurich this morning. It was a smooth flight and got home before midday. Billy was here. He's doing well. My wife was out when I arrived, but then she got back and we went out for lunch. Had a very good time at the Precious Metals Summit in Zurich. I will probably do just one video about that experience to let you know what I learned and what transpired there. It was very interesting. Anyway, I'm back now. Billy is back, and we're back to normal schedule. Of course, today's video is a little later. It's not in the morning. And I just wanted to show you something, though, before we look at the new target for CPI. Well, they call it inflation. We know that it's really not inflation in the classical sense, but we're going to use that term. So what I've got here, and I was surprised when I saw this coin, and it's called 2.5 Euro Pinos, and it's the equivalent of a $0.50, a silver $0.50. It was minted in Hamburg, Germany in 1952 under the U.S. occupation, of course. And it says Europa Federata, and it's also got General Eisenhower, as you can see. And then on the other side, there you go, Europa Federata, and it's 2.5 Euro Pinos, which is the equivalent of a $0.50, and it's 90% silver. And yes, I've got a Kennedy $0.50 here. You can see that it's pretty much the same size. And why am I showing you this coin? Well, because I'd never heard of the coin. There's not too many there that were minted. I think only 10,000. And some of you might have heard that the European Union was like a CIA creation. Well, I have. And it's interesting that they kind of gave people a taste of what was to come, I think. Of course, it's not called a Europino, but it's a euro. And it says Europa Federata, which means Federal Europe. And this coin was minted in 1952, just 10,000 of them. I thought it was really interesting. Where did I get this coin? Well, from someone on Instagram, and I recommend his page. He's got a lot of nice coins that he sells. It's BRIC Coins on Instagram. He's based out of California. He ships it very safely to the UK as well. I'm not sure how much I paid for that, about 30 pounds. So I've been meaning to talk about this subject of the inflation target, or the CPI target if we want to be really correct, but I'll use inflation because that's what's been used, of course, by the mainstream media. And yeah, this actually came out on Monday, this article, so it's not that long ago. It says Goldman TS Lombard confirm Fed inflation target hike now inevitable. They have kind of an informal target of 2% inflation, or CPI, which is really a bad thing if you think about it. It means that the currency that you're supposed to use and that you earn your wages or salary based upon that currency that is supposed to be debased by 2% every year. That's like a tax. But that's the Keynesian fallacy, isn't it? That we can't have deflation, that money or currency can't be sound. And of course, we know that under the present fiat currency system, if they don't inflate or debase the currency, and the only way they can inflate is by creating more, and the more of these funny money currencies or funny currencies they create, the more diluted it becomes. Yes, and like Bellin GP, I've had him on my channel. It's a good YouTube channel. I'm not sure if he's changed the name of the channel, but Bellin GP, the way he explains inflation is like you take a glass of milk and then you start messing with the milk, put water in it, it becomes more and more diluted. And that's what this 2% inflation is. It's just enough water to dilute it, but for people not to notice. And you only notice it like 10, 15 years later, the 2% inflation. But they're talking about now moving it up to 3 to 4%. And why are they doing that? Well, because if they really wanted to kill inflation, and they can't, of course, or bring the CPI back to 2%, they'd have to raise rates a lot higher. And the excuse they're going to give, of course, for raising the CPI target to 3 or 4% will be that it's worth it because it keeps unemployment low. But I saw here in the UK, for example, wages are rising around 5%, and we just had CPI today in the UK. They call it inflation, of course, but it accelerated at a 41-year high of 11.1%. It was expected to be at 10.7. So Bank of England, of course, is asleep at the controls. They can't really raise rates too much, and that's the problem. And the Fed can't raise rates too much either, and their excuse is if they raise it too much to bring the CPI down to 2, it's going to create too much unemployment. So they'd rather have people working and earning less and less and less than having people unemployed. And that's why I think it's important for people to know that that's coming. It's part of this financial repression game. As far as interest rates are concerned, I don't think they'll be able to keep interest rates that low anymore, especially if they're going to keep a 3 to 4% CPI target. And this, of course, is just, I would say, it's not for certain, but the fact that they're discussing this is quite significant. So I think that's what's coming. And how is it going to affect, let's say, the general public? Well, they're going to get more and more fleeced. Yes, people are going to have jobs, but the purchasing power of their currency is going to fall faster than their wages can keep up with that fall. So wages will not go up enough to cover for that. And yes, it's going to affect, as I said, the people at the bottom, wage earners. It's going to affect, of course, pensioners, people on a fixed income. The people that will do okay are the people at the top, upper middle class, the top 1%. They know this is coming. They're going to protect themselves. And it's just like in third world countries and places like Brazil, where I grew up, you could see the difference. You had very few who had a lot and were always doing well, and the majority of the public not doing well, struggling. So it's going to be the third worldification of the United States, of Western Europe, and we're seeing that already here in the UK. So yes, I was in Switzerland the last few days. On the way back, I sat next to this guy, and we started talking just before we landed, because he was taking some nice photos. It was a very clear day in London, some nice photos of London. And he happened to be English, but he lives in Zurich. He teaches at a university, and he was coming to visit his family. And he said, yeah, I notice every time I come back to the UK, prices are more expensive, everything's more expensive, and people's wages are not that good. He said Switzerland is expensive, but people earn a lot more. So they have, their standard of living there is quite good. Inflation is not as bad in Switzerland either. So I think Switzerland will do okay. But yeah, the majority of the Western world, we're going to be subject to this, it's called financial repression. Basically, they have to do that if they want to keep the system going. Are they going to succeed? I don't know. But that seems to be the way they want to go. And again, how can one like protect themselves? Well, if you're able to earn enough to save, which is a big thing these days. I personally keep stacking, of course, gold and silver, and yeah, try to find ways to cut back on things you don't need as well. What about deflation? Well, I don't see them wanting deflation because they'd rather have people working and earning, even though the earnings are going down in real terms, than people unemployed. What about CBDCs? People talk a lot about that because it seems like that's what they want to do. They want to make people so desperate that they're going to ask for a solution, and it looks like it could be coming. There was an article yesterday. Here come programmable dollars. New York Fed and 12 banking giants launch digital dollar test. So I'm going to put the link to these two articles that I've covered here. Well, I haven't really gone through this latest one, but you can read it. And it's interesting that FTX, the crypto exchange, collapsed, and now you've got these exercises at the New York Fed and 12 banking giants. And a lot of the people that got involved into cryptos, they don't really understand the objective of cryptos and Bitcoin. They haven't really looked at it like I have. I looked at crypto at Bitcoin 12 years ago or so, or 10 years ago. And the fact that it has to be decentralized and it's a move away from the current system. But a lot of people that got burnt with FTX and other blow-ups, they're going to think maybe, a New York Fed or a Fed digital currency is safer. And they're going to be told that as well, I think. So that's the way we're going. Expect more and more currency debasement. So before I look at the markets, we'll look at the markets this afternoon. Usually I look at it in the morning. Just wanted to say that this video is sponsored by my affiliates, Miles Franklin, one of the registered dealers for the US Mint in the US, and also ITM Trading. If you're looking to buy precious metals in North America, check out the description of this video. I've got referral codes with Miles Franklin and ITM Trading. In the UK, of course, we've got gold investments. A promo code there is Monaco64. So it's just after 3 p.m. London time, so US markets have opened. So let's start with the usual, gold and silver. Well, spot gold is trading at $17.75, is down about $4. We have been as high as $17.85. The low is $17.70. I noticed yesterday when I was in Zurich that silver got up above 22 during the morning Europe time, and then the US came in and it got sold off quite sharply. Again today, the same kind of pattern We went above 22 earlier on this morning, and now we're back down as the US comes in, as the Fed starts throwing paper at silver, it seems. So we're at 21.50, down 6 cents. The low overnight, though, is 21.39. I think gold and silver have done well in the last few weeks, and they will continue to do well. They're kind of pausing right here, but I think the trend is a lot higher. So the Dow futures is up 60 points. The S&P 500 futures is down about 15, and the NASDAQ 100 futures down about 1%. To the currencies, we got sterling down slightly at 118.49. We got the euro up almost 0.5% actually at 103.90, and we got the dollar unchanged versus the yen at 139.35. Let's check out the other currencies. We've got the dollar down slightly versus the Swiss franc at 94.25, and the dollar is up about 0.7% versus the yuan at 7.10. We've got the Aussie dollar unchanged, 67.52. Dollar is up about 0.8% versus the Canadian dollar, 133.00. And the Kiwi dollar is up slightly at 61.64. To the general commodities, WTI crude is down 2.5%, 84.20. Brent crude is down 1.8 at 91.45. High grade copper is down 1.5%, 376. US nat gas is down 3% at 608. Let's finish off with the bond market. Let's look at the Treasury market. The 10-year yield right now, yeah, that's dropped about 8 basis points. It's at 372. So we've come from above 4. It was above 4 last week prior to the CPI number. I saw that PPI was lower than expected. So is inflation really going to come down in the US, or prices? Maybe through these measures they'll come down temporarily, but I think most people are still in denial about inflation. They don't really know what it is. and I think the central bankers are not going to really bring it under control. I think we've got a decade of stagflation to come, and it could be even worse, I think, than the 1970s. So there you go. If you enjoyed this video, make sure you hit the like button. Please share far and wide. Think about subscribing to my channel if you haven't yet. And yeah, with that, I wish you all a great rest of the day. Take care. Bye.